Howdy, Jacob here. Today we're looking at NVIDIA Corporation. Definitely, I'm sure plenty of you have heard of this company. 2.2, 2.3 billion market cap or enterprise value market cap in the semiconductor industry. They are the head honcho of the AI gang, posse, whatever, which we can see from their immense revenue growth over the last year, growing from 26 billion, 27 billion to 61 billion, over 100% growth, with margins that their operating margin is almost as great as their gross margin from 9 years ago. Absolutely astounding year for them. I just wonder if they can keep this going or not. I have no disrespect for NVIDIA, but again, I view companies on their present value of earnings and free cash flow basis, and I'm more conservative than others. And so my valuation could very likely be much lower than others. But again, it's not my goal to buy into hype. It's not my goal to buy into companies with the biggest growth rates. I have to be conservative yet understandable with my assumptions and move forward appropriately. So the balance sheet is very, very impressive. 26 billion liquid cash with less than 10 billion in long-term, short-term debt. Very healthy balance sheet. They reinvest into themselves quite a bit. They also buy back a lot of shares. Their dividend pays out maybe 5% of their 5-year average free cash flow. So very low, really not much at all. A little bit of acquisitions, but again, very heavy on the share repurchases and the reinvestment. But they also do stock-based compensation, $3.5 billion. So keep that in mind. It is currently offsetting at least the last 2 years with the share change, but that is a good amount of stock-based compensation. So, I think I'm ready to start making some assumptions. And yeah, this is a fun company. I just know that I will be setting assumptions that others might feel are very inappropriate, but it's just me being a conservative investor. So to me, they've had growth like crazy in the past. Their GPUs are insane. Yeah, it's a $2 trillion company, but you can't base growth necessarily off the market cap. It has to be based off revenue, uh, earnings potential in their region. We really don't know what the growth of AI is going to be. We don't know how far that can expand. And so to me, 20% might be a bit rich, probably. It's bigger than I think any other assumption I made, but they're just that type of company. And, just because I get to a price, even if it is close, doesn't mean I buy it at that price. It means I do more research. So this is just me saying I want to, maybe do more research quicker. When it comes to averages, 31, 30, let's go up a little bit. Let's say that maybe it's more like 36, 34. Let's do a wider range, 36, 32. For share change, I'm going to say that's relatively flat, meaning that they're just going to be reinvesting back in themselves. Their buying back of shares is likely not going to outdo share-based compensation. But again, obviously, they've historically bought back shares only in the near term, and with how well it's priced right now, we don't know if it's cheap or not, but cheap or expensive or not. But I would presume that it might not be the cheapest right now, so they might hold off for a bit. With terminal PE, let's do 25. Do I think that that's reasonable? Maybe. 15% return. And they don't increase this dividend, at least they haven't the last 4 years, so I'm keeping that the same. And yeah, it just looks a little bit overvalued at this price. I don't know what to say. I think NVIDIA is going to be a great company. When it was lower, I likely wasn't making these assumptions. And again, I've done videos where just because you're right in the short term does not necessarily make that the right decision. So even though NVIDIA is up maybe eightfold or so from what it was a year ago, year and a half ago, I don't remember. That doesn't necessarily mean that it's worth that much more or that you made the right decision. It looks like it is recently, like the business 100+% their revenue. So it looks like it is right. But again, keep in mind the long term of businesses is going to be their present value of earnings and free cash flow. So hopefully you enjoy the video and have a fantastic rest of your day. Thank you.